Hey guys, and welcome to the Working Money Channel. There's a bit of a crack there in my voice. Chairman French Hill says the crypto market structure bill, the Clarity Act, has overwhelming bipartisan support, and he hopes to get it done in the next few weeks. Guys, this is essentially what's going to spur on crypto activity. We're seeing the drawdown right now in the space. This is the XRP chart, and we're seeing that downward channel for XRP and other cryptocurrencies. Essentially, Bitcoin needs that next boost to get all other cryptocurrencies up past their all-time highs. Of course, Bitcoin still needs to surpass its all-time high, in my opinion, in order for us to see all these other cryptos move. But of course, legislation, that's a step in the right direction. Listen to this.
Mr. Chairman, let me get your take on the digital assets legislation. You just mentioned the Genius and Clarity Acts. The Senate Banking Committee still discussing the framework for that Clarity Act. Senator Tim Scott chairs the committee, and he said that he believes there will be between 12 to 18 Democrats open to voting for market structure on digital assets. How are you expecting this to play out?
Well, I really enjoyed working with Kirsten Gillibrand and Cynthia Lummis, both who've been real leaders. Chairman Tim Scott in the Senate has put together a working group on the digital assets framework. The Clarity Act in the House, which I wrote, got 78 Democrat votes here in the House. Back in July, we sent that to the Senate with really a suspension level vote. We got such overwhelming support by Democrats and Republicans. I would hope that the Senate would consider taking up the Clarity Act in their process and simply making improvements to it. I think that would be a great approach. But Tim Scott and his working group and the leadership of Subcommittee Chair Lummis and John Bozeman on the Ag Committee, they all have this at a top priority, and I hope we can get this done in the next few weeks.
So getting it done in the next few weeks, I think, was the important takeaway there. The next few weeks, guys, brings us into late September. And, if you know, you know. I'm just going to put a horizontal line here real quickly on the Bitcoin halving date, which was back in, it was 2024. It was April 20th, 2024, if I'm not mistaken, right in there. Okay, that was the Bitcoin halving date. And for those of you guys who follow me and have subscribed to the Patreon, you probably know where I'm going with this. Where are we today, guys? We are about 502 days off the Bitcoin halving. So we are getting very, very close. If you want to hear more insight of where I think the market's going to go, you can follow me at patreon.com/workingmoneychannel. It is only $5 a month. I have rolled back prices due to popular demand, but you got to subscribe and stay subscribed to lock in to that $5 subscription. That's where we talk about the market. You know, I've learned a lot since the last bull run. I don't plan on round tripping my XRP or my Bitcoin or any of these cryptos. If we do, in fact, see these ebbs and flows in the market, we need to be able to predict them and pinpoint that top. Cash out for maximum profit. That's my goal. Patreon.com/workingmoneychannel if you want to follow what I'm doing. So we're getting close, guys, and French Hill is saying the same. Within the next few weeks, we could, in fact, see some meaningful legislation that's going to turn things around. And we have naysayers, too, from Swift specifically. Tom Zakach, okay, he posted something, apparently posted it on LinkedIn about a week ago. Every major shift in finance begins the same way. Technology lays the foundation, but trust decides when the building opens. I've been around long enough to see a few next big things promise to reinvent global finance. Most fail, but they underestimate one truth. Banks and financial institutions, regulators and markets don't move on hype. They move on trust. And so, when he's talking about that, here, he discusses specifically blockchain. In the mid-2010s, we saw the same with blockchain stablecoins, ICOs, DeFis were technically brilliant, but legally fragile. Financial institutions stayed on the sidelines, not because they didn't understand the tech, but because the trust scaffolding wasn't there. Now we're in 2025, and public open blockchains are becoming too big for finance to ignore. Tokenized treasuries, collateral on-chain, cross-border payments that actually settled. The shift is real, but here's what most people are getting wrong. They think the public chain itself is the solution. It isn't. It's raw execution. Deterministic code, global scale, and uptime and programmable rails. Powerful, yes, but without legal enforceability, compliance, and privacy, it's just fast engine with no cockpit. So there was something in this that Coin Tribute did point out. Kind of an offhanded remark that Zakach here did mention. He's the chief innovation officer at Swift, by the way. He argued that surviving lawsuits does not demonstrate resilience, stressing instead that true adoption in finance relies on trust, compliance, and shared governance. So what he is essentially insinuating here is that he doesn't necessarily think that Ripple is going to do Well, based solely alone on the fact that they survived the SEC lawsuit, the debate started when he published his reflection on how banks approach this new technology, and that was the page that I was just reading you up there. I will link that in the description of the video if you guys want to read the rest of it. He referenced some examples like internet-based payments in the 2000s and blockchain innovations such as stablecoins and ICOs. He talked about blockchains as substrate, a base layer that enables execution at scale. But he also did comment on enforcement and, the regulatory clarity. And the comment section turned into a debate, a Ripple supporter responding by praising the company's track record, claiming XRP had already proven itself uniquely durable. They pointed out that Ripple had endured nearly 5 years of regulatory scrutiny while still pushing ahead with solutions for cross-border payments. And so this is what his reply was. He dismissed the notion that Ripple's ability to endure lawsuits was evidence of strength. Instead, he argued that resilience in financial systems comes from neutral shared governance structures where no entity holds single control. So that was his comment to one of the XRP community members' responses in the comment section. As the discussion spread, though, Zaktash, don't know how to pronounce that, elaborated further. He said, the real question was not whether a network was centralized or decentralized, but how banks manage risk in their settlement flows. Zaktash pointed out that banks are generally cautious about using assets outside their own balance sheet, even on networks designed to be neutral. They tend to favor settling in money they issue themselves, which helps manage risk and maintain control over liquidity. Well, that all makes sense. But guys, if you have a working structure, a tested tech stack, and if it's been tested at scale, well, you can rely on XRP for that liquidity. If you guys didn't catch the video I did this morning, I urge you watch it. I'll link it up here in the top right-hand corner. Essentially, I was talking about this possibility of XRP becoming scarce on the network, all due to the fact that, as an extension of the amendments that are now being amended on the XRP ledger, we are actually seeing real code that now will, in fact, foster scaling up of the XRP ledger and bringing us into that new phase where the economy and finance can scale. So check out that video if you guys didn't catch it. To be honest, I think this is a bit of a short-sighted response, I think, from Tom Zaktash from Swift. I mean, that's just my opinion, though. Gonna keep moving along because we do have some more news, guys, with Webus International. Now, remember they added XRP to their strategic reserves? Well, guys, they've just partnered up with Air China, unlocking access to over 60 million members and introducing future XRP payment solutions for 60 million plus Phoenix Mile members. This coming directly from Webus. They're a leader of AI-driven mobility, specializing in premium customizable chauffeur services worldwide. And today, they announced that they have just signed a strategic partnership agreement with Air China Limited, a major international airline with over 60 million Phoenix Mile members worldwide. Through this partnership, Webus's travel service brand, WeTour, may provide Air China's passengers and members worldwide with airport transfers and premium chauffeur services. This collaboration, this is a quote, this collaboration with Air China, with the potential to reach more than 60 million members and passengers, not only expands WeTour's global service footprint, but also accelerates our vision of building a Ripple integrated travel ecosystem. So guys, they are looking to integrate Ripple and XRP. Looking ahead, WeTours plans to provide Air China's Phoenix Mile members with access to its overseas platform with XRP payment support, enabling travelers to benefit from faster settlement, tokenized rewards, and blockchain-enabled vouchers directly tied to their membership benefits. So how cool would that be if you could use your XRP to pay for travel member perks and services with Webus International? So they also say here, enabling travelers to benefit from faster settlement, right? Tokenized rewards and blockchain-enabled vouchers directly tied to their membership benefits, subject to future business development and regulatory compliance. This marks a key step in connecting one of the world's largest airline loyalty bases with the next generation of Web3 travel solutions. So this is coming from Webus, who already decided that they were going to use XRP in their reserves, have be one of those, I think it was about a dozen companies, maybe a little less, but about that want XRP in their reserves because they do see it as a value-added token. Not only can they hold it as a store of value, guys, but they are also realizing that XRP is going to be utilized in real-world situations. And so if they can pull from their reserves, well, that's just going to help their bottom line. You know, we look at the XRP price today and we think to ourselves, it's been higher, right? It's been higher than $2.84, but no fear, guys. I think we are on the precipice of something very big. I think surpassing $3.66 is only a matter of time. And one of the reasons I say that is because Ondo Finance's global markets has now gone live, providing one of the largest ever selections of U.S. tokenized stocks and ETFs on chain with the liquidity of traditional finance. Guys, and it's starting on Ethereum, but it will be moving to the XRP ledger soon. 100 plus assets are now live with hundreds more on the way. So if you take a look at global assets on Ondo, okay, this coming from Nathan Altman, it's finally here. For us, this has been years in the making. Since announcing last year, we've seen many other tokenized stock offerings enter the market, but the big breakthrough hasn't happened yet. So if we take a look at where Ondo lies in terms of, the competition, okay, you've got walled gardens like Robinhood, Denari, Securitize, and Superstate, and then you have freely transferable stocks and bonds and all those native assets. You can get that through X stocks and Backed, but apparently Ondo is the only company where that is native tradable liquidity, whereas the other companies, it's segregated liquidity. Many of the existing platforms are still walled gardens. All users have to be onboarded with single party and can't self-custody. So guys, this is where Ondo is different. Since the tokens are freely transferable outside the US and subject to certain jurisdictional restrictions, from day one, you can transfer them just like stablecoins. So think of that for a second, right? The tokenized assets don't have to they're not necessarily tied to one specific geographical jurisdiction. And so because of that, you can transfer them to anybody around the world. You can, transfer part of a tokenized asset. So for example, if you have a share of Apple stock and you have, 5 shares and you want to give half to somebody in South Korea, well, you can say, send 2.5 shares of my Apple stock to somebody who is halfway around the world. So they talk about how, there's high friction from traditional exchanges, but GM solves this issue by enabling instant atomic minting and burning of Ondo tokenized stocks and ETFs in exchange for stablecoins. Instant minting and burning is what allows for arbitrageurs to easily keep prices on various secondary market venues in line with primary market prices. So there's a mechanism for all this. And guys, I will link this in the description of the video if you're interested in reading further. Ondo Global Markets did launch with the support from many of the world's leading applications and platforms. So here's where this is the list so far of where we're seeing this happening right now. Okay, a lot of different tokenized platforms there. Building for an open economy, the current investment ecosystem is broken, and global investors have historically faced barriers to accessing the $64 trillion in U.S. securities markets due to high fees, limited access, transfer friction, performance, fragmentation, and geographic exclusions. These problems have persisted over decades, locking millions out of capital markets and stifling innovation. But guys, with Ondo Finance, that is all changing, setting the highest standard for tokenized equity. So Ondo Global Markets represents a step change over existing tokenized platforms, solving the structural issues that have plagued on-chain equities, illiquidity, wide spreads, and persistent price dislocations. Unlike prior models that attempt to recreate liquidity, Ondo's tokenized liquidity is inherent and it is organic, enabling for first-time tokenized securities at scale with price integrity and true market depth. So it's a whole new way of looking at trading and finance, essentially, allowing everybody around the world to participate in this new global economy. Ondo Global Markets delivers a next-generation feature set for tokenized stocks, ETFs, and more, including 24/7 peer-to-peer transferability, 24/5 instant mint and redemption, access to traditional exchange liquidity, and DeFi compatibility. It is secured, verified, and enforced. So this is, all stuff that should get us very excited for those utility coins that are going to make a difference, guys. XRP Ledger being used by Ondo Finance, but we do have to see it scale. That is the one thing that we still have not seen yet. Ripple has even said that 10% of all the world's assets will be tokenized in 5 years. So by the year 2030, we're only going to still see about 10%. This one courtesy of XRP Crypto Wolf. SBI CEO Yoshitaka Kitao has shared Ripple's recent blog post about the future of tokenized assets and Ripple's role in making it real. Now that the world is moving deeper into digitalized assets and blockchain tech, Ripple has stated that institutions are seeking a digital asset custodian solution that delivers the same robust services and protections they've long relied on for traditional assets: impenetrable security, seamless trading access. The company believes that over the next 5 years, at least 10% of the world's assets. So, 10% doesn't sound like a lot, but if we think about how big that number actually is, that is a huge milestone. So guys, Ripple did just come out with the Insights blog, Digital Asset Custody in Action, 3 use cases driving institutional adoption. Okay, and what they say here, digital asset custody isn't just back-end service. It is a confidence factor that transforms hesitation into action. And I think that more people, like I said, because this is going to become so accessible, before it was just, maybe a handful of people in, institutional traders, obviously this is their job, but For the retail, for the everyday mom and pop, you have to still have a level of confidence to feel, secure enough to put your money into these types of investments. And what I also think this is going to do is really just open it up to more people. I think we're going to see more services that make it feel easy, like Robinhood, that make it feel easy for people to just kind of step on up, come on in, put in your money, invest. And guys, that's where we're going to see more dollars come into the space. So institutions are seeking a digital asset custody solution that delivers the same robust services and protections. But on top of that, we are going to see more of the world's assets tokenized on these types of ledgers by 2030. We're witnessing the construction of today's financial infrastructure. The banks that are establishing robust crypto custody frameworks are now the first to market digital asset services, while those that wait are left playing catch up. What does institutional grade digital asset custody look like when it's deployed at scale? Well, it looks like Ripple custody, enabling institutions to transform high-level digital asset potential into operational reality across three crucial use cases: core safekeeping, stablecoin issuance, and governance. And so they outline those points here. And guys, this is just going to expand over time. Again, 5 years really isn't that long when we think about it. We've been waiting for the tokenization of real-world assets for a very long time now. And just to add to that, guys, we're seeing a push here, maybe from the BIS. There's a new general manager at the Bank for International Settlements, and he's been there since July of 2025. I didn't realize he replaced Augustin Carstens. This is Pablo Hernandez de Cos, former head of the Bank of Spain and ECB official, and he will serve a 5-year term, and he wrote a paper on crypto assets in 2022. This courtesy of Anders here. In my opinion, he wrote something that is bullish for the XRP ledger in contrast to other types of consensus mechanisms. So with regards to the XRPL specifically, the paper is named Crypto Assets, a Financial Authority's View. In the paper, he discusses 3 different consensus mechanisms, so proof of work, proof of stake, and proof of authority. He's more critical of the two of the consensus mechanisms, proof of work and proof of stake, while he's more positive on proof of authority. Proof of work, he writes, is the price of electricity. Proof of stake, he says it's less decentralized than under other mechanisms. So among proof of work and proof of stake, proof of authority, he's saying that proof of stake is the least decentralized, but proof of authority, he doesn't give any critique. So that is an interesting observation. But he notes that validators under this system is known, and thus they rely on reputation instead of economic interest. So there's no critique there. And if we can extrapolate this and, think about it in terms of the XRP ledger, even though he mentions these things, these 3 different consensus mechanisms, briefly in his paper, it's obvious that he prefers proof of authority over the others. Now, David Schwartz did also recently post on X about how never chains are adopting designs that are fundamental to XRP ledger, such as deterministic settlement and proof of authority-based consensus mechanisms, those choices leading to lower fees and predictable settlements. And it seems the new general manager of the BIS would agree with this. Even though the XRPL is not a typical proof of authority chain, it does have similar characteristics. Validators are known, since in order to end up on the UNL list of other validators, you have to be known and have a good reputation, but there's no central authority deciding which validators can be trusted in the XRPL, unlike traditional PoA. It's up to each validator. Therefore, the XRPL is decentralized. Plus, anyone can run a validator and end up being trusted by other validators if they can prove themselves to be trustworthy. So guys, this makes it a pretty good system. Also consider the vast majority of crypto companies in the market, cryptocurrencies in the market that are either some version of proof of stake or proof of work. But interestingly, in the top 3, we only have one of each: Bitcoin, which is proof of work, Ethereum proof of stake, and XRP having proof of authority type of consensus mechanism called RPCA. And just remember this too: what other crypto company attends these types of meetings? Anders with another tweet here. Reminder, a failing crypto company with lack of adoption wouldn't end up here. So use common sense. Guys, Ripple is part of the Committee on Payments at the BIS, and this was just from last year, July of 2024. Renee Hugen, Director of Payment Operations at Ripple, on the Committee of Payments at the BIS. They would not pick a loser, guys. They're definitely focused on how this technology is really going to benefit the payment systems on the other end. XRP and the XRP ledger being central to a lot of this, and interoperable, because it's not going to be the only one, but certainly perhaps central. XRP sitting at $2.84 is just the beginning. I think we're going to go much higher. And again, for more information on my thoughts, where the price is going to go, I'm going to be posting my price targets and price predictions over there at patreon.com/workingmoneychannel. Check it out if that's something you're interested in. And for those of you guys who like the swag, check out the Working Money Channel merch store. Link is in the description of the video. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.